Hello traders, the title of the video is Know What Does Fibonacci Patterns Have Got to Do with Elliott Wave Analysis Today. Alright, so as I've been explaining to traders before, if one is using the Elliott Wave theory or principle, one must learn, about Fibonacci retracement, Fibonacci extension, fractal pattern, most importantly, Fibonacci patterns. Alright? So if you do not know about Fibonacci pattern, you can check the playlist. Just go YouTube search Fibonacci patterns, a video playlist by Day Pro Traders YouTube channel, and you see a playlist. And where how you will see a series of videos in the playlist explaining to you the different types of Fibonacci pattern. So in this video, I want to discuss what Fibonacci patterns have got to do with Elliott wave analysis today. But sometimes a lot of Elliott wave traders do not understand the Fibonacci pattern. And I think it's highly recommendable for all Elliott wave traders to learn to master Fibonacci pattern, because after you see the multi-wave, which is this one here, price goes up from A to B, forming the multi-wave, and then a correction has begun. The Elliott wave traders, the Fibonacci traders, will call the top of the multi-wave as A for alpha. Hold on a second, we call it A for alpha. Hold on, please. We will call it A for alpha. And we call, this move down here as, they will call, hold on, please. Hold on, please. Have you spotted that? They will call this point A for alpha. And they will call this the top of the multi-wave as X. This is something, as an Elliott wave trader, you need to understand. Alright, so they will call it this SA, and they will be thinking of A, B, C, D forming the Fibonacci pattern A, B, C, D. Alright, so if you agree with me, probably they will call this one, this point here where my cursor is, they will call it a point B. So the reason why you must know is that sometimes it creates, because of the activity of Fibonacci pattern traders, what they are expecting, what they are forecasting, what's going through their mind, they can create a bit of confusion for Elliott wave traders. You may be wondering what's going on, and you may end up making all sorts of crazy decisions. But it's good to know how other traders are trading and what is going through their mind, so you may understand why the price is doing what it's doing. So if you look carefully, an Elliott wave trader will say definitely this is an impulse wave, alright? And everybody else will agree that this is definitely correcting this move down, is definitely correcting that multi-wave. But now it becomes a bit complex to know where is the third wave starting from. Some of them may say it's starting from here. Some of them may say from here. Another trader may say from here. Alright? Myself, I would say it's starting from here. No, in fact, where are here? Right here. What? I would say that it's starting from here. Okay, so but if you look carefully, if you apply Fibonacci retracement to the move from here to here, which Fibonacci traders are calling XA, and they say A, B, C, D, the price stopping at 78% Fibonacci retracement of SA, and you can see here why they sold it down big time here. Right? They sold it down big time here because those Fibonacci traders were expecting a Gartley pattern. For them, this move XA plus A, B, C, D is a Gartley pattern ending at 78% Fibonacci retracement level of this move down. So they were trying, you see the this candlestick bar, those are sellers here, all displayed by those Fibonacci pattern traders. They try to push it down more, but the price just turned around, you see, but creating more confusion between the price. This move down, this move up is a fight, so to speak, all right, of the bullish traders to escape the activity of the Fibonacci traders. You see how they turn it around here very fast. Yeah, those are Fibonacci traders that were trying to sell it down, and bullish traders stopped them right there to bring it down more. And again, right here, those traders, again, those Fibonacci traders, they were the one trying to sell again here because they know that the price is running away and they want to push it back down, and they push it back down again. You see? So all these activity happening here, if you understand the Fibonacci patterns, you will know quickly what is taking place here, or if you don't understand fully what is taking place, you will have a bit of idea what type of traders are active during this part of the price action. So you can know, say, all right, now we have the 21st, and this move down, we are likely to see Fibonacci pattern traders, and you want to know what is going through their mind. So they will be watching the 78% Fibonacci retracement level of the SA. Some of them will be watching which level? 88% level. Why? Because of the bat pattern. The bat pattern is another Fibonacci pattern. So when the Gartley pattern trader fell, so the price start going up, people say, now the bat pattern trader that are waiting at 88.6% Fibonacci retracement level of SA, I'll say, oh, all right, it's not Gartley pattern, or probably it's a bat pattern. In fact, a lot of trading software are trading the Fibonacci pattern. So they were ordered here to sell because of the Gartley Fibonacci pattern. They were ordered here at 88.6%, almost 100%, to sell again because of the bad pattern, and so on and so on. And finally, before the price continue to go up, we can go on. You see this move here, this section here, at the 138.2% level. This is another group of Fibonacci trade. This is another reversal point of either a crab pattern or butterfly pattern, and so on and so on. So you want to understand, especially after a multi-way, a lot of Elliott wave traders get into trouble. So if you are that type of trader, so you recognize clearly that every time that you see a corrective, every time a multi-wave is completed, all right, you make money during a multi-wave, but you end up giving everything away or losing more as soon as the multi-wave has ended. If that's you, if you notice that, all you need to do, you can just decide not to trade a corrective wave. That's it. So you want to see a rising channel, and you want to see that resistance are broken, and you want to participate. So all you will do, you may just, after the first, the multi-wave is completed, you may, all right, decide to wait until the price goes above this high here. So breaks the bull, retests, or form a bullish pattern above this high, the prior high. That's what, or you may be taking the first higher low above that high. So you may decide to stay away from it. All right? Because it can be a little bit messy, and traders end up losing because of the fight between the Fibonacci pattern traders and the Elliott wave traders. So in my view, as I explained to you, because of the Gartley pattern Fibonacci traders and bad pattern Fibonacci traders, I am reluctant to put my, hold on please, my second wave here. I'm also reluctant to put it here, and I'm reluctant to put it here. I prefer to put it here because the dust has settled a little bit more, and it looks to me that, what have I done now? It looks to me that this is the first wave of a higher degree, and my second wave is a little bit messy, ending here. All right, it's a kind of This is what I'm saying to you. If you follow our guideline, you'll be all right. So it's kind of a head here, and this is the left-hand side shoulder, and a bit messy. You see this one here. You may say this is the right-hand side shoulder, but then it fell, forming another right-hand side shoulder again, somewhere there. So it's a kind of a messy inverted head and shoulder chart pattern. And that's why if you follow a guideline, you may decide to call this one the first manual wave of the third wave of a higher degree, second manual wave of the third wave of a higher degree, and the third manual wave of the third wave of a higher degree, fourth manual wave of the third wave of a higher degree, and fifth manual wave of the third wave of a higher degree. And the fifth manual wave of the third wave of a higher degree is now subdivided into 1, 2, 3, 4, 5 manual wave. There will be a little bit more move up. Probably, if I put just a line a little bit up there, because I don't have enough room to push it more, and then I will just put a median line between the two, this dotted line and the median line, and you want to watch that level. We're going to color it now into pink, all right? And or even the price can go all the way to the top here. All right, so we are now in the fifth manual wave of the third wave of a higher degree in red here. So the manual wave of the third wave of a higher degree are in green. 1, 2, 3. So third manual wave also subdivided into 5 manual wave. Okay, fourth manual wave of the third wave of a higher degree. We are now in the fifth manual wave of the third wave of a higher degree. And the fifth manual wave of the third wave of high degree is also extended. This is a very, very bullish stock. The third wave has been extended, and the fifth wave is also being extended. People love the stock and they are buying it, as it's going up. And this is why I was telling you, during the last lap, which is the fifth wave, even the fifth manual wave or the fifth wave, you are likely to see an extension because of the activity of the late comers. Everybody recognizes that the price is going up, and there is a target ahead, and everybody wants to join it. Those who were selling because the stochastic was overbought on a yearly chart finally give up and join the bullish traders and start buying like a mad investors. All right. You see, this is what's going on now. So it is very, very important for an Elliott wave trader that want to become an expert Elliott wave analyst to know the Fibonacci pattern, Gartley pattern, bat pattern, crab pattern. I'm not talking about cracker combo, though it's a food, American food that you can eat, cracker combo with mussels, with a spicy sauce. Okay, I don't want to go into detail, otherwise I'm going to get very hungry. All right, so we say there is a pattern, Fibonacci pattern called a crab pattern. There's another one called a bat pattern. There's another one called butterfly pattern. You may check dayprotrader.com or YouTube search Fibonacci pattern video playlist by Day Pro Traders YouTube channel. Don't watch it anywhere else. Watch it on that channel only. All right, you can quote me on that. All right, now, okay. And then so we will say probably our third wave of a higher degree went somewhere here, and we will be expecting the fourth wave of a higher degree, followed by the fifth wave of a higher degree. All right, as you can see, this is what I'm saying to you. The price, you see, this time, you see this section here did not break below the moving 50. If it did below it, what's going to counter our mind? Probably a correction is not that way. If you come all the way to the 100, you will say probably that section is a portion of the correction. But so far none. Here in 1998 up to 2003, it's a corrective phase in the stock market in general. The price, you see, it went below the moving average here. It went below the moving at 50, 100, and 200. The blue line here, 200, and form a triple bottom on the moving average 200 before the blah 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 has started, and we have a new move again up. So, as I mentioned to trade last time, moving at 50, moving at 100, moving at 200 can also help our Elliott wave come. So, be sure to familiarize yourself with the Fibonacci pattern so you may know exactly what the traders are doing in the financial market. Understand also that trading software, trading algorithm, trading robots are using Fibonacci pattern, Fibonacci key level, Fibonacci retracement, Fibonacci extension, and the Elliott wave expert will always combine the Fibonacci trading with Elliott wave principle trading, and you want to do exactly the same thing so you can position yourself at the right place and also at the right time in order to gain something out of the market. Because when confusion arises, when it becomes very, very complex, one of the tips that I share with trading, and whenever you see a double bottom or triple bottom, you can just cover them like a confusion, double bottom, cover it as a confusion, and then stack out, and then stack afresh. Here again, you see, it was all the blah blah blah. You can just say, okay, it looks to me like a confusion, cover it, and then you say one, and then from there, if you get lost, you can quickly get back online. It's like using Google Map, when you get lost. By covering the confusion, it's like you are removing it. Now you can see better now. So the portions, that's how you diffuse confusion. You remove the confusion and you examine what is left. So that's why we are talking about stable data. What is making sense? So this is what is making sense to you. Examine those ones and cover those that are confusing for you. But the confusion very often will arise just because of the activity of other traders that you do not understand, and mainly the Fibonacci traders. They trade the way they want to trade, and they are quite aggressive sometimes, and this is the activity here. They try to push it down after the ABCD, and they are expecting a Gartley pattern. As it goes above that level, they say, all right, it's a bad pattern, As it goes above this high, they are talking about, butterfly pattern, crab pattern, And you are wondering, what is all this going on? But you want to know, so you can read and understand the market as a professional trader. So this will conclude our discussion again about know what does Fibonacci, does a Fibonacci pattern, have got to do with Elliott wave analysis today. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, on Facebook, and also on Tumblr. Alright? If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. Today is free. Alright? Tomorrow it may not be free. Alright? So subscribe, please. Alright? And click on the notification bell. So anytime we record a new video, you will be the first person to be notified. I think I should tell Google to charge people for subscribing to our channel. If you agree, let us know in the comment section. If you disagree, all right. I know you all disagree with that, okay? All right, so we have finished our wave count. We take into consideration everything. Now I'm speaking to traders that are truly trading this financial instrument. When we have finished the wave count, the aftermath of a sweaty Elliott wave count, what do? So, this is it. Pitch fork 2 at the beginning of the fast. Well, that's very compulsory, okay? The wave count, you have done your job as an Elliott wave analyst. That's it. You see how it breaks above the range or the pitchfork 2 from a higher low. Can you believe that? Look at that. So, which means professional traders were using the pitchfork 2. So you too can use the same thing and do exactly the same thing. Because if you have a pitchfork 2 on your chart, you can use it, yes or no? All right. So now it breaks above it. You see, so what we are doing now, we are just polishing our wave count. We finish with our wave count. We are happy with our wave count. Now all we are doing now, we are switching our attention to the price and now polishing our wave count without assuming anything. Yeah, this is what the surge here will call drilling. We are just drilling, getting ready, all right, to trade. Is that correct? So let's see whether it's truly parallel. All right. So the reason why sometimes I dwell on those things, I do it for new traders. So some traders say, Joe, you don't have to do that. But for new traders, it's important because some people, they are very new in the financial market and they want to know what we are doing. If I talk about it, they will say, what is he talking about? I won't subscribe. This guy doesn't make any sense at all. Okay. So remember the time when you are very new trader on YouTube. So be very patient with other traders. Okay, so this is the exercise. We have to polish your wave count. And again, you connect the high of the first wave, and the third wave is not yet finished, so we can't do it yet. But we can do something else, which means we can connect either this first minor wave of the third wave itself and the third minor wave of the third wave. So I'm connecting the high of that. I'll push it at this. I won't put it at the top here. I'll put it this one here. I prefer that. Okay, but it's just the only one sticking up. So I connect the high of the first minor wave of the third wave and the high of the third. Okay, minor wave of the third wave. And you see, that's where we are now. The price is just ricochet. It's just touching it gently here. You see how that trend line just connecting those two. How it's just sitting on it, trying to form, okay, the fifth minor wave of the fifth wave, the fifth minor wave of the fifth minor wave of the third wave. So from here to here is the fifth minor wave of the third wave. Now, but from here going up to there, that's the fifth minor wave of the fifth minor wave itself of the third wave of a higher degree. So we have a double minor wave, each wave subdivided into 5. All right, so here we are. So you see that line, and again I can do this one. So you see, because the top of that third wave is not yet ready, normally we'll connect the top of the first and the third wave, okay? But because it's not yet ready, for now I will just connect it, the high of the first wave and the high of that third wave, and the high of the third minor wave of the third wave. You see the green one here? I put it all the way to the top now. It makes more sense to me to do that here. Then I will just color it. You will say, Joe, that's too many lines. Yes, that's my chart. All right, and just leave it there. And then all you are doing, you just wait, okay? Wait like a cat for trading setup around those key levels. Now that the price, anytime the price is extended, try to draw a common center line very close to the price. So I'm going to connect this low and this one, the first one here. That's what I'm doing. Because if I put it here, it will cut through it like this, then it's not useful to me. So I'm working with the one that is useful to me. That's why I'm connecting this one and this one, unless in case you are thinking why you didn't put it here, because it will cut through it. So I'm using to always use the one that is useful. All right, and I'm running out of color now, and I don't know which color I should use. I use red. Okay, see now, is that beautiful? Now you see it. Okay, so this is exactly, so it becomes like a routine. All right, so you're doing the same job every day, analyzing the chart. After you finish your wave count, you go into the mind of other traders. You're on a monthly chart. Okay, you go to the yearly chart quickly to see the bigger picture. Does it add up? Yeah, looks like it. Some people say first wave, second wave, or this third wave on a higher degree. George, are you stupid or what? What's this, blah, blah, blah. But the point we want to make and remember is that, okay, Fibonacci traders are in the market and they are doing their own thing, and we want to know what they are up to so we can understand more, okay, the price structure. When confusion is arising, we can diffuse those confusion by understanding exactly who is doing what in the financial market, so we are not afraid, so we can pinpoint the wave correctly. So I've said enough. It's good to talk, all right? So until the next time, enjoy yourself and be very happy. We are the CnzvWS traders talking about, okay, know what does Fibonacci pattern, does a Fibonacci pattern have got to do with Elliott wave analysis today. Happy trading to you all, and I will speak to you soon. Thank you for watching.